everyone. Welcome to another episode of the Closing Bell, coming you live from traderstruthreview.com in Kuala Lumpur. Okay, and unfortunately, last week we didn't do our closing bell for the week ending 12th of July 2013, as I was away to Manila actually for a business trip to try to get more business in my perspective, more managed funds, which is good. If any of you who is interested to let us manage your funds, let us know. Okay, and that would certainly be good for all of us. Oh, okay, so the week before, looking back my notes inside here, we said that foreign funds are selling gradually, but which is not a good news. On a weekly basis, we did have a spring. Now let's go back last week when we first had here. Last week was 5th of July, which is somewhere here. Here, there we go. 5th of July in here. That's right. Yep. Okay, let's switch to a weekly chart, and this is what I meant. Okay, this is what I meant, right? We on the 5th of July, when we came in here, we did have a spring, and that spring actually is a sign of strength. Now, what I did say is that the market cannot break below this spring, which is around the 1717 level. You see 1717, so that's a possible no demand if it does break below in here. But since then, we did say the tapering off, which is the US FOMC, the testimonial that was given by Ben Bernanke 2 days ago on the Capitol Hill, that he is willing to accommodate more money printing, meaning more money going into this financial market, the stock market. So that's why we are seeing higher closing. I will comment on the US Dow Jones going in there. But as you can see, I've been looking the last 3 to 4 days opening posting that I did. The market solid will try to break above the 1800 level in here, and indeed it break. Okay, things that is positive I like, just want to show you, is the increasing here. See the increasing volumes is increasing. Now that's good, which mean rally is likely to be sustained. But the next question is how far before the next pullback. Now, for those of you who've been following this blog, thank you for your support for the premium members there. And you can see so far we only have one pullback, which is this one in here, and it is less than 3%. On the month to month, the higher closing was still zero, but on the year to date, which means if you compare what we have today to the 1st of January 2012, the KLCI is up about 6.5%, which is not bad considering Shanghai is down almost 15%. So this market is following on an uptrend in tandem with the US Dow Jones, which is good news. Okay. Now, if I look back my old notes on the 5th of July, the KLSCI was doing a 1774. Right now, let me just erase this. We are hitting new high. I think we already hit 1800. Now, remember, not all stock rally. And today, one stock that did very well was actually Tenaga, which has improved earnings, but it is gone ballistic in my sense due to the weakening of the US, weakening of the Japanese yen per se, because a lot of the loans actually are priced in the Japanese US bond. So whenever the Japanese yen get more expensive, then you will see Tenaga be affected. But this is a reverse case as yen is getting weaker. So the last few months, quarters, I do believe Tenaga registered a much better profit going forward. That's what it is, one of the biggest contributor to the KLCI. That is why we are seeing the CI are breaking into the 1800 level. Make no mistakes, ladies and gentlemen. KLCI has breached above the KLCI has breached above the 1800 resisting level, and we are looking at the new all-time high. Very similar story to the US Dow Jones that we have seen before, which is above 15,400 over level. Okay, so think bullish. I mean, you should be thinking bullish right before when we broke above the so-called the deadlock that we had just before the general election. Now, those of you who is coming for our July 27, we still have a few more seats. I hope I can able to see you then. At that time, we have prepared a special presentation for you guys, for all people is in there. Unfortunately, the the event will not be recorded because we have 3 more speakers. Benny Lee will be there, myself as a speaker, and we also have Mr. Fu Senchin, who is the managing director of ECS ICT, whom we invested for a lot of our client, which is also doing very well on that. So I hope that all of you would come. We have seats still available for our July 27, 2013 talk, which we only do twice a year. And then following that, we also have our foundation course on the take note of the date. Okay, it will be on August 5th and 6th. Our next foundation course will be on the August 5th and 6th for those of you who is interested to come to our foundation course to learn more about the VSA. All right. Okay, so now let's go and look at the stock. Now, very simple, we have a correction in markets going higher. That's why I want to talk about it. So on the FBM 70, similar story here. You got the resistance in here. What's about to breach? This is more for the second tier and mid. Second tier, which is the mid cap and small cap. Now, there's a lot of talks also on the market about EPF taking position on the small cap. Now, if there's a lot of position being taking up, we would see a fly off in a lot of the below 2 ringgit up to 4 ringgit stock that's going to move higher for that reason. So there's still a lot of opportunities. Run your filter for those of you who have, if those who don't have can use our stock pick, which have done considerably well. Okay, all right. Now, next thing I'm going to do is look at the foreign funds. Okay. Now, if you look at the foreign funds, this is over a period of almost 6 months up to February. You could see we have a nice lead up to 15. Since then, there's been a tapering off. Foreign funds are leaving the country. This is partly due to the